call the Ontario Real Estate Association up to make their presentation. Thank you very much. If you will take your seat, state your name for the purposes of Hansard. You will have 10 minutes for your presentation.
Thank you. Good morning. My name is Pauline Aunger, and I am the President of the Ontario Real Estate Association. I want to thank you for the opportunity to present our views on Bill 218, the Ontario Tax Plan for More Jobs and Growth Act 2009. Joining me today is Jim Flood, who is our Ontario Real Estate Association Director of Government Relations. By way of introduction, the Ontario Real Estate Association is one of the province's largest trade associations, with over 47,000 realtor members in 42 real estate boards throughout Ontario. OREA was founded in 1922 to organize real estate activities and develop common goals across the province, including promoting higher industry standards and protecting private property rights. As many of you know, OREA's primary concern with Bill 218 is the provision for the harmonized sales tax. OREA has opposed the harmonized sales tax since the early 1990s. Our opposition has been documented in our pre-budget submissions over the years. We oppose the tax because it will increase the tax burden on Ontario home buyers, sellers, and owners. Our members believe very strongly that home buyers, sellers, and owners already pay their fair share of taxes. If harmonization is allowed to proceed, home sales will be hit with an additional 8% tax on all the services consumers use to facilitate the transaction. For example, moving expenses, legal fees, appraisals, real estate commissions, home inspections, and many more will be subject to a new tax. OREA estimates that based on the 2008 prices, each transaction will attract some $1,500 in tax, or $262 million province-wide. With respect to new housing, the tax situation is even worse. The Ontario Home Builders Association has indicated a new home costing $500,000 will attract an additional $6,000 in new tax under HST, while a $600,000 house will incur additional taxes of $12,000. For existing homeowners, the HST will add 8% to the cost of their electricity, their heating, their phone, their cable, their lawn care, and snow clearing bills, as well as ongoing home renovation and maintenance. When added together, 8% more tax on these services will cost Ontario homeowners millions of dollars. OREA is very concerned about the impact the HST will have on Ontario's housing market. Past experience has shown that when governments increase taxes on real estate transactions, affordability and sales volume go down. While it is hard to quantify, we predict that HST will have a similar negative effect on the real estate market throughout this province. As you know, the real estate market in Ontario is one of the key drivers of our economy. In 2008, the multiple listing service home sales accounted for $55 billion, generating over $8.6 billion in ancillary economic benefits to the provincial economy. Further, the land transfer tax created $1.36 billion in revenue for this government. In addition, one of Canada's foremost authorities on housing and real estate, Altus Clayton, calculated the Ontario MLS home sales generates 84,000 direct and indirect jobs every year, including 1,000 direct jobs in manufacturing, 13,000 in finance, real estate, and insurance, and 19,000 direct jobs in construction. The imposition of HST will jeopardize job creation in the housing industry. That summarizes OREA's concerns with respect to the impact that HST will have on resale housing, new housing, existing homeowners, and the real estate market. We would now like to address the government's claim that input tax credits on most business inputs will somehow lead to lower prices. There may be some merit in that argument if a person is buying a manufactured item and their only consideration is price. However, we have yet to see how the same principle applies to the service sector, including services associated with a real estate transaction. In fact, OREA notes that in the TD Economic Report, the impact of sales tax harmonization on British Columbia and Ontario, it states that consumers will be better off for goods and services under HST except in cases where the services are currently taxed only at the federal level. This is exactly the case today for services used in real estate transactions that are PST exempt. If the TD Economic Report is correct, the theory that input tax credits will lead to lower prices simply does not apply to services used by consumers in real estate transactions. Finally, we have heard suggestions that realtors should simply reduce their income to offset the HST. On July 1st, 2010, realtors will have to explain to our clients why our clients must now pay an additional 8% more on a variety of real estate-related services. Our response will be, the tax is being imposed by the provincial government. We are not responsible for the creation of the tax, and we reject suggestions that we should somehow absorb it. In closing, where government changes tax policy, it ultimately creates winners and losers. In this case, manufacturers are the winners and the service sector are the losers. Ontario homeowners, buyers, sellers, and homeowners are all losers with HST. We are pleased to speak on their behalf today. Thank you, and I look forward to your questions.
Thank you very much.